Welcome everybody to Tech Talk here at MarketStream.live. My name is Joe Cusick from the Cusick Group Securities offered by MoneyBlock. It is May 10th. Happy birthday, Dad. And this is where we look at some charts and then we look at the options. It gives us some analysis of what's been going on with an underlying and what could potentially happen as far as a range. And we're going to look at a 3 and 9 day range. And we're going to talk about three stocks, one an ETF and two that are retail stocks that are going to have earnings. And you're going to know these names. The first one I want to kick off with is Kohl's. KSS is the symbol. Stock's trading at $40.30, up 48 cents. That's good for 1.18% to the upside. They have earnings. As a matter of fact, if I look down here, it looks like they have earnings on the 11th, which is tomorrow. That's going to be pre-market. And it looks like 27 cents is the estimate. Now, with that being said, I have no idea what that means for the stock. You can see the current action for the stock it's been grinding to the downside, right? And it's been consolidating here in this $38 to $40 range, and it's now trading on the upper end of its range for the last, basically, let's say 3 months, 2 months. With that being said, we also have the bulls taking control here on the short and intermediate term basis because it's over its 20 and 50-day moving average, but still well above long-term resistance at 43 on Kohl's. So with all that being said, not looking at the fundamentals, knowing what the expectations are as far as earnings, they got 27 cents. Where could this thing possibly go? Well, it's had basically a $2 range for the last month and a half to 2 months. If you take a look at the implied volatility at the options, running at around 150 on the options that are expiring this week, 75 for the options that are expiring in 9 days, so very high when you look at it versus the general market. And when you look at it historically, it's at the 75th percentile. That means that normally volatility is running around 50% in Kohl's. And right now you have the front month implied volatility 2 times that. The next week, which is next Friday, May 16th, that's being run at 75. So you basically have implied volatility skewed very high. What is that telling you going into earnings tomorrow morning for Kohl's? That's telling you with an IV rank of 75, there is a heightened sense of big violent moves in Kohl's. Now that could be either up or down. As a matter of fact, the options that are expiring in 2 days are pricing in the potential of a 6% range. Now the stock is up 1.27%, so you could see another 4.5% move or more in the stock, either up or down for the remainder of this week and specifically going into earnings tomorrow morning. For the 9 days, you're basically pricing in a $2.34 range, or in other words, a 7.9%, or excuse me, an 8%. $3.40 is the range, or basically an 8% move in the underlying. So there's a pretty significant move being priced in to the earnings, roughly around $3 or 7.4%, and then a $3.40 range for the next 9 days, which is roughly 8% move either up or down in Kohl's. So if you are in Kohl's, you could see it as high as 43, which would challenge its resistance. Or you could see it back down as low as 37, 38, which is right where its support level has been over the last few months. We'll have to keep an eye on that, but now you have a range for Kohl's. The next one I want to take a look at is big box retailer Macy's. Now Macy's this session challenged yesterday the 20-day moving average and now is above the 20-day moving average, up 17 cents or basically 0.6% at $29.46. What this is telling you is that the challenge is on for the bulls. The short-term bulls have taken control. The stock, a retail stock, has been on its lows. Expectations right now as far as earnings are concerned is right around 35 cents is the estimate. Stocks trading up ahead of that. If you take a look at the implied volatility rank, it's coming in right now at 88. Almost 89. That's telling you that there is a heightened expectation of potential violent moves either up or down in Macy's. Now, retail has been firming up as of late. Take a look at XRT, which is the ETF. We'll take a look at that in a second. But right now, the options are pricing in that are expiring in 2 days, going into this event tomorrow morning, that there could be a potential 6% range. In other words, up $1.98 or down $1.98. So you could see it as high as almost $32 or as low as 27 and some change. You also could see over the next 9 days a 7.9% range, almost an 8% range. That's $2.34. So again, you're seeing that the stock could get above this 50-day moving average, which would put the short and intermediate term bulls in control, or you could see that it could challenge that downside of basically 27 and some change, which is below the recent support level of right around 28.5. So some significant moves being priced into Macy's coming into the earnings. And I'll tell you right now, that's a pretty decent range of basically around 8% for the next 9 days in Macy's. Taking a look at XRT, just from a technical perspective, retail has really been moving to the upside for the last 4 sessions. It was challenged a couple days ago, but it has now momentum above its 200-day moving average on a daily chart. Retailers are moving up. These have been beat up. They've been lagging this latest leg to the upside for the last couple months. Now, in the last couple of weeks, it's actually been moving to the upside, now challenging the 200-day moving average overall as a sector. Let's keep an eye on Kohl's and Macy's tomorrow morning. They have earnings. Finally, I want to take a look at USO. This is the ETF that tracks oil. Oil has been moving to the upside lately. You've seen that it firmed up. And after we had the API and then the EIA data, which showed significant draws from the storages, basically over 5 million barrels again drawn from. That was confirmed with the EIA report. We did see a slight build in the gasoline stocks, but we're seeing oil being drawn. That's been a bullish for the oil. So we'll watch that very closely. But USO right now has an IV rank of around 29. So that puts it on the lower third. So there's not a heightened expectation of huge violent moves. But currently right now, it has captured that gap. A couple days ago, last week, it pulled back from its $10 mark and then gapped down the next day. And it was trading at $9.73. With it trading up 30 cents at $9.87, it's basically captured that gap. Right now, for the remainder of the week, it has about a 14-cent range. It's already moved 3% today, so it's already outside of its estimated move. It has a 26-cent range for the next 9 days. So oil is on the move. USO is on the move. Let's see if it continues to the upside, especially if we start challenging that $48 level. You could see 50 pretty quickly, especially with the latest reports that came out on the inventory numbers. All right, folks, that is it for Tech Talk. Join me at 4:30 Eastern Time. I'll be wrapping up all today's action live on MarketStream. See you then.